Good morning and happy Thursday, all you wonderful melonheads. Today is May 18th, 2023. We got earnings from Walmart this morning. And what a difference between Walmart and Target and Home Depot. And I'm using those in two different categories because, man, Walmart was a just night and day, the difference between these two earnings reports. And what does it boil down to? Walmart is benefiting from inflation and what it has done to the American consumer and his spending patterns. People are being driven down the luxury ladder, if you will. People who used to shop at Target can't afford to anymore, and they're being driven into Walmart. Walmart has positioned itself very well with their successful pivot to groceries, which is helping get people in the door at a time when people are spending less money on their wants and more money on their needs. Target has tried to do this. They've not been anywhere near as successful as Walmart has. We're going to look at a couple of different categories in these earnings reports. Man, is it really making a big difference. Elsewhere this morning, we got some information from the Philly Fed. The Philly Fed Manufacturing Index came out, and it was not good. Again, further decline in manufacturing activity in the Northeast does not spell good things for our economy. And with that, we are going to shrink my big melon of a head, and let's see what's going on in the market this morning. We've got the S&P is down 6 points, maybe 7.16% at 4,152. We've got the Dow is down 46 points or 0.14%. That's after an up day of 400 points yesterday. On what exactly? Nothing. Why did the Dow go up 400 points yesterday? Oh, Speaker McCarthy made some rose-colored statement about, I think we're going to get a deal done. No substance, no arguments, no supporting data, nothing. Just a nice statement while he smiled. Okay, 400 points in the Dow for that. Why not? Up it goes. NASDAQ is up 17 points or 0.14% right now at 12,517. We've got the DXY is surging again this morning at 103.3, up 43 basis points this morning. Stronger dollar is coming, folks. I've been talking about this for a while. Any way we go here with this debt ceiling debate, whether we raise the debt ceiling or whether we default, either way, I think we are looking at a dollar shortage. The question is, are we looking at a severe, grotesque dollar shortage or just your run-of-the-mill dollar shortage that sends the Dixie up a little bit? Either way, the DXY, the dollar strength measured against other currencies, is going to go higher. And, I've been looking at this chart for a while here. This is the DXY going back to about February of last year. I had drawn this head and shoulders pattern that said, hey, it looks like the Dixie was going to go lower, but I drew the neckline. I said this could break either way, up or down here. And, the more I looked on this debt ceiling debate, the more I said either way, no matter what outcome happens, the dollar's going to head higher. I thought we were going to bounce off the neckline, and it looks like that's what happened because if you zoom in here over the last few days, you can see really since about May 10th, the dollar has been surging higher, and it looks to be continuing that today, currently at 103.37. Looking over at the bond market, we've got yields are higher across the board. Notably, the 1 month is moving up a little bit right now. We're at up 10 basis points or 1.84% on the 1 month Treasury, current yielding 5.59. Elsewhere, the long end is also up a lot higher. We have got the 10-year is at 3.63, the 2-year at 4.23. So yields heading higher. Yields heading higher. That is bond prices heading lower. So we have got a sell-off going on in bonds this morning. Looking over at commodities, gold is down another $23 today at 1961. It looks like that support at 2,000 did not hold. Down we go with gold. Silver at 23.60, down another 28 cents today, or 1.22%. Look, guys, higher interest rates, stronger dollar, neither of those is very good for gold. I know we have the whole supply-demand dynamic going on at the COMEX and how inventories are dwindling, and I get the macro picture for precious metals is very strong, but looking at the technicals, looking at what the dollar and the interest rates are doing right now, that is going to be the prevailing winds in the precious metal space, at least for the time being. Look, what else we have? We got crude oil is down 80 cents this morning at 72.03, down about 1.25%, and natural gas at 238, up another 2 cents today. But here is the big story in Yahoo Finance. Walmart raises full-year outlook as first quarter sales top expectations. What a difference between Walmart and Target's quarter. When the economy slows and inflation is high, it's often Walmart's time to shine, and Walmart delivered on that old saw in the first quarter. The world's largest retailer reported the first quarter same store sales growth that beat expectations as consumers traded down from traditional supermarkets and slowed purchases of discretionary merchandise from rivals like Target. And that is a pretty good summary right there, that sentence. We've got a couple of key points we touch on here. Same store sales growth beat expectations. That's the big one. Anytime you're talking about a retailer or a restaurant chain or anything like that, same store sales growth, that is the big one. And same store sales growth for Walmart came in 7.4% higher. Contrast that with flat same store sales at Target. Remember, I mentioned yesterday in my live stream, same store sales growth needs to at least keep pace with inflation, and Target's did not do that. We've got 5% CPI right now. So at the very least, Walmart's 7.4% same store sales is beating CPI. Is it beating the actual rate of inflation? Probably not. But either way, a lot better than Target's. The other thing we see in this sentence is consumers traded down. That's a big one. People who used to shop at a more expensive retailer are now being driven to Walmart by economic hardship. So the economy's paying Walmart's gain. And we've also got here supermarkets and slowed purchases of discretionary merchandise. Again, people spending more money on their needs, less money on their wants. Walmart is well positioned to benefit from that. The company also raised its full-year earnings per share forecast to a range of $6.10 to $6.20 per share, up from its prior expectations for earnings to come in at $5.95 to $6.05. Now, there's a couple of points I want to talk about in this article here that I want to contrast with Target's. All right, we talked about same-store sales growth. Walmart, 7.4% higher versus flat at Target, unchanged. What about e-commerce? That was a big one. E-commerce at Walmart was up 26% year over year for the quarter. All right. At Target, it was down 3.4%. So Walmart's e-commerce business is booming. A lot of people are getting delivery from Walmart now, apparently. Net sales up 7.6% at Walmart. Target, they were only up 0.5%. So either way, Walmart is just eating Target's lunch any way you look at it. And looking at the stock this morning, well, Walmart stock is up almost 3% on that news, trading at $153.73, up $4.20 this morning. So congratulations to you Walmart shareholders out there. You are having a fine morning indeed. Elsewhere, we got the Philadelphia Fed Manufacturing Index. Now, this is one of those obscure data points that unless you live in this space and you really study the data, you're probably sitting there saying, what? But this is very important. These PMIs, these manufacturing indexes, these give you a really good measure of the health of the overall economy. And the Philly Fed Manufacturing Index was negative again. Anything negative means manufacturing is in decline. Even if it is less negative than it was last month, it still means it's declining. It just means it's declining slower. The Philadelphia Fed Manufacturing Index in the U.S. increased to negative 10.4 in May of 2023 from a nearly 3-year low of negative 31.3 in April. All right, so it increased, but it's still negative. So that means manufacturing is still in decline. I want to emphasize that. Better than market forecasts of negative 19.8, though. General manufacturing activity in Philadelphia continued to decline overall, but at the slowest pace in 4 months. New orders came in at minus 8.9 versus minus 22.7 last month. So that's an improvement, but still fewer orders this month than last month. Shipments were negative 4.7 versus negative 7.3. Again, still negative. What else we have? Employment declined to negative 8.6 from negative 0.2. So that one is not only negative, but it is worse. That means less people working in manufacturing in the Philadelphia region. The prices index remained below long-run averages, with prices received index declining further, negative 7 versus negative 3.3, although prices paid increased slightly more, 10.9 versus 8.2. Now, I want to talk about that one for a little bit because that's really telling about what's happening to manufacturing businesses. Their margins are getting clobbered, absolutely squeezed. The prices received, what they're getting for the stuff they manufacture, was down more than it was last month, negative 7 versus negative 3.3. But the prices paid, what they're paying for their raw materials, is up and increasing, up 10.9 versus 8.2. So when the amount you're charging goes down, the amount you're paying goes up, your profits are getting smaller. Maybe that's got something to do with why the employment index declined, because when your profit margins are getting squeezed, one of the first moves you usually make is to cut back hours or lay people off. The survey's future indexes continue to reflect muted expectations for growth, negative 10.3 versus negative 1.5, with almost 37% of firms expecting a decrease in activity over the next 6 months. Now, I just want to show you guys this chart here because this is the actual index. Here's your zero line right here. We've now been below zero really since the beginning of the second quarter in 2022, and we're still heading lower. We did get a nice uptick this month, but again, there's some chop, there's some up and down in this chart anyway, so I expect this is probably going to continue downward. But let's zoom out here. Let's zoom out 10 years. Let's zoom out to 25 years here, and you can see this decline in the Philly Fed Manufacturing Index. And what I want you to emphasize it, draw a line at zero and look at the area under the curve. The area under the curve from zero shows you how much decline, total decline in activity there's been. And if you look right now, we crossed zero about middle of last year. We've stayed down the whole time. This is actually almost as much time as we've spent below zero through the whole GFC, through the whole global manufacturing crisis. I mean, we came down at least for the first 3/4 of it. Now, you got to omit this blip from 2020. That was the lockdowns and everything. But folks, manufacturing in the U.S., there's a lot of talk about a resurgence in U.S. manufacturing. And, we did the CHIPS Act and we're reshoring. We're going to bring the work back from China. It's not happening. It's supposed to be happening. We need it to happen. We can't rely on China for our supply chain anymore, but it's not happening. Manufacturing in the U.S. is getting worse. Why is it getting worse? Because the economy is slowing. Across the board, the economy is slowing. I don't care what you hear on CNBC. I don't care what Kayla Scanlon over at Bloomberg Opinion tells you. Oh, things are so good. Mint the $1 trillion coin. Yeah, great. No, the economy is slowing in virtually every category, anywhere you look at. Does that make me a doomer? So be it. I'm a doomer. I look at the numbers and I call it like I see it. Manufacturing activity is in steep decline in the United States. And over here, also, we got initial jobless claims today. Now, there was a little bit of a hiccup in the data. Initial jobless claims came in at 242,000 for the week. Or is that for the month? No, that's a weekly number. 242,000 for the week. Now, that's down from 264,000 last week. Last week, we saw a big jump in initial jobless claims. Now, there's a story out there about suspicion of widespread fraud in these jobless claims numbers in the state of Massachusetts. People think, or there's suspicion, I didn't bring up the whole article, but there is a suspicion that somebody out there is filing a large number of fraudulent claims in the state of Massachusetts, and that was responsible for this big uptick in initial jobless claims last week. That hasn't been confirmed. That is just a suspicion, but those numbers came right back down this week, so maybe there is a there. Either way, unemployment benefits, 242,000 filing for this week. That means the weakness in the labor market that we suspected was coming, it's not as bad as we thought. And if you look this morning at the CME Group's Fed Watch tool right now, check out the probability of a rate hike in the month of June. Currently sitting at 35%. A couple of days ago, folks, this was near zero. Right now, the market is saying there's about a 1/3 chance that we actually get another rate hike in June. It boggles the mind, but there it is, right there, 35%. It was down near zero a couple of days ago. It was as high as 40% this morning. This may have something to do with why the DXY is currently surging up 48 basis points to 103.36. So that's what I got there. By the way, I have to say thank you very much to Mr. William Smith. Thank you, Will Smith. Appreciate the support of the channel. He says, supporting for the king of melon heads. Yes, I'm not king of the melon heads. I'm more of a emperor for life kind of thing. Yeah, come join me in the People's Republic of Jakistan, where I rule with an iron fist. But I think you will find I am a kind and benevolent ruler, even though I live a lush, lavish lifestyle at the expense of the plebs. But, I call it the People's Republic of, so that means it's good, Thank you very much, Will Smith. I appreciate the super chat and the support of the channel. And thank you very much to my Patreon supporters for everything you guys do for the channel. Appreciate you guys very much. There is a link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.